In this video, I'm going to show you how this one tweak in my daily routine completely transformed my trading and the way I think about trading. We've all heard it before, how many experts and gurus suggest journaling your trades, whether that be on a simple Excel sheet, a notebook, or a software as a service. You see, one thing is journaling your trades, but another thing is really sitting down and applying the end-of-day system to truly progress and compound your trading. And today we are going to look at just that and how you can implement it yourself in your trading routine. Hey, what is up traders? Welcome back. If you're new here, my name is Michael, and on this channel I share with you what it really takes to learn and become a pro trader. The real hard truths, the ups, the downs, the no bullshit raw grit that it takes, and that not many want to show off, because let's face it, Rolex and Lambos attract more people than the real truth behind real trading. So what does EOD system stand for? Well, EOD stands for end of day, so end of day system or end of day markup. It's a process I started implementing around 6 months back, and it has been a complete game changer for me. In essence, end of day markups or end of day systems is sitting down, going over today's price action and driving deep into what happened, why it happened, and how you could have taken advantage of that with your trading plan. Now, back when I used to just journal my trades, because that's what everyone would tell me to do, I had this little Excel spreadsheet to journal my trades, but never really took advantage of the journaling process until I combined it with end of day markups. Journaling allows you to see things like your strike rate, how many trades you took, how many were high probability, how many were low probability, and some additional comments on those trades, but not the real deep stuff that moves you forward. So don't make the same mistake I did and just journal your trades for the sake of journaling. So you're probably wondering how exactly an end of day markup looks like and exactly how to do them. With that being said, then let's get right into it. All right, so today is Saturday. Right now it is 12:13 in the afternoon, and I'm going to do the end of day markup for yesterday's price action, Friday, because I wasn't able to complete it. Now, I normally trade the New York session because I tried waking up at 2:30 in the morning for like a month straight, and frankly, it just wasn't sustainable. It was killing me on the inside. So I said, fuck it, let's just do New York and just leave it at that. The first thing we need to do is analyze the higher time frame and analyze the chart at this level, right? So what we have here is Euro USD. The same thing applies to any pair that you want. So when you have it on the highest time frame for me, which is daily, it could be the weekly for you, but for me it's just daily. Daily 4 hour and 50 minute. So first we look at the daily after the end of the day. So after in my case, after New York session. And here I like to have my drawings organized. So if I just click here, it'll show me my markups for the daily charts. And this right here, this whole thing right here is basically yesterday's price action, 25th of February 2022. So this is what happened, right? So okay, so first things first, I see this on the daily, big bullish candle impulse up, right? It came off this daily demand. Well, actually, it came off of this sweep from here. So this candle sweep these lows that I had already marked up as a week. This for me is a week low. And this is basically the whole daily range, right? So it's just understanding this, right? So this whole macro picture. Once we have looked at the daily, and then we can proceed to look at the next time frame for me, which is the 4 hours. So I go into the 4 hour. I still keep the daily drawings on screen. And if I activate the 4 hour drawings, then we start to see a little bit more in depth of what happens, right? So we have that price actually ended up sweeping these lows, tapped into this 4 hour calls for a pullback, and then price started to just rally up, right? So this white thing here is my 4 hour range. This whole leg is a 4 hour leg. We didn't close below it, which means this whole thing could be potentially weak. And usually when we sweep the external range liquidity and we don't close above it or below it in this case, that means that it's very probable that a significant pullback will happen, which in effect it did end up happening. As you can see, it didn't close, it just wicked it, it wicked this, and then it went up. And by the way, these white squares are demands, these blue rectangles are supply. So after you look at this on the 4 hour, I can see that price effectively went really up. So I have this in mind, right? I already know how the day looked like. I already know how the 4 hour looked like. So then we proceed to the next the next higher time frame for me, which is 15 minutes. I activate the higher time frame 15-minute drawings, and then I look at that from a 15-minute perspective, right? So as you can see here, this over here, in this spot over here, we have two ranges. So this is Friday over here. I like to turn this on over here, this indicator which says which are the session timings. So this purple right here is Asia session, right? Asia session made this new high over here in the 15-minute structure. And then it broke down and made a bearish structure here. But I can already tell by the way this formed, you see these equal lows here is liquidity. It didn't form really well. So when this high formed, I kind of already suspected that this was going to get swept, which it did, and it ended up mitigating this 15-minute supply to demand from this 15-minute supply. Once price reached here, you can see that there were probably some long opportunities for intraday plays here during London session, which is this blue background over here. And after London session ended, then there was this white background here that is New York for me. This is where I trade. Now, if I could, I would love to trade this because lately the big moves have been happening on London. But as I said, I can't. It's not viable for me. And anyway, so after you see this, right, you see what the 15-minute ended up doing. You understand what just happened, like I just explained it. In this case, you would be explaining to yourself in your head. You could even annotate these things, right? So when you analyze these things, ideally you would be annotating them. So I don't annotate at this time frame because I already know what's happening. But then you could say, for example, over here, you have this marked up saying that this low didn't form well, so it got swept, right? So when you do this, this exactly what I'm doing right now, literally annotating these things, understanding what's going on, the more you see it happening, the more it just becomes so ingrained into your mind, like you just can't stop seeing it. You just end up seeing it. You already kind of like know, when nobody really knows what's going to happen in the market, but in a sense, on a probabilistic nature, you understand what might happen, what is more probable to happen. Like for example, the fact that this didn't make a decent low, didn't sweep liquidity, right? And it created these equal lows as liquidity. So what that means is that basically these lows are probably going to get swept, which it did. And then it just adds to your understanding. The more you see it, like if you see this for the first time, then it's not really enough data. But this is probably like the 50th time I've seen this happen. Now, if you see this happen for 50 times, then you understand that it's just very probable to happen. So it's not wrong to expect it to happen, but you can understand that if it happens, it's something that was probably going to happen based on how many times it has happened in the past, right? So I normally don't annotate at this level, but you can even begin annotating from the 4 hour or the daily time frame. I like to annotate in the lower time frame because that's what I need to work on right now on my execution. So after the 15-minute is done, now we can zoom in into the lower time frame to see what happened during yesterday's New York session, right? So if we go down, zoom in into the 1 minute, effectively I had at this time two biases, right? So the way I'm speaking is how you should be talking to yourself, right? So you basically, when you do these end of day markups, you end up practically annotating everything you see and saving it for later and really talking to yourself through it, right? So just like I'm talking to myself, I'm saying, okay, so this is what happened on the 15-minute. I understand what happened. Okay, this is like the fifth time I see this happen. All right. I'm starting to see it happening more. I understand why it happens. Those internal conversations are what really cement these concepts into your mind. So I've already marked up some things in the 1 minute, but as you can see, I have some stuff missing. So all of this was practically empty. Like I just saw this on the 1 minute. Now I have this, for example, over here. I literally wrote this. It says, I was aware that price could pull back from this 15-minute POI, which is the supply zone, which is why I had marked up this, but ultimately 15-minute bullish order flow took control. So I understand that I was looking for sells here after price mitigated this 15-minute supply, but I saw that longs were more in play because if you can see here, this 15-minute demand is what broke this 15-minute supply. Okay, so there's a 1 minute demand chain forming over here, right? So then, like I said, when you're annotating these things, when you're studying, this is when the end of day system comes in. You literally go down and you start annotating these things so you can really understand. So you say 1 minute demand chain, right? So it's a 1 minute demand chain. Then you understand that this is how 1 minute demand chain looks like. This is what caused the failure of this 15-minute supply. Then you keep diving deep. Okay, so where could we have possibly entered? For me, I was looking to enter here on this 1 minute demand because this liquidity was attractive to me. So I was assuming that something like this was going to happen where price would come down, sweep, and then just blast off, right? But it didn't happen. So instead, price came here. It seemed to mitigate this whole range right here, and then it just blew up, right? So that's the thing that I need to understand. So okay, so I don't have that. So I go over here and then I write down a price mitigated the whole range to the left, right? So it's these things that you're gonna be annotating to understand and fully cement the concepts. Okay, so continuing, then I see that this break of structure happened, right? And then I see this 1 minute chalk over here. We're inside this 15-minute demand. So I can already start to assume that price may start to go up from here, right? Because we have this 1 minute break of structure. There was a flip. This 15-minute demand had no structural liquidity, which is just some other way of saying that there was no inducement for this demand, which means that we need to see some sort of liquidity sweep to the right, which is exactly this flip right here, right? So people were selling here, and this flip is what caused the break of the structure, but this is the liquidity that was missing for this 15-minute demand. When it got swept, you can see it mitigated here. And unfortunately, there were no entry on the seconds. I'm currently testing the seconds time frame, so this is why I wrote this here. What does that mean? That even though if you follow your plan, some entries will just not be available. That's just the way it is. But it's important to write these things down so you understand those things, right? So this could have been a very good entry on the 1 minute. You could have just set your limit order right here, right? And then probably target something up here. It's a pretty good return. The 15-minute could be right 1 to 6. Anyway, so continuing on with the price action, you see this, right? You start seeing how price, you can see that price eventually tapped this other 15-minute supply. Okay, so again, we could potentially pull back from here, but it did not end up happening. In fact, I was still looking for longs at this point. You can see I have a limit order set here, and I was waiting for a post-mitigation inducement because there was no liquidity here up above to be taken. So And effectively, as I said, sometimes you get in, sometimes you don't get in, even if you follow your plan. In this case, you can see that these equal lows didn't get swept. It just blew up from here, right? So it happens, right? These things that happens. And if we continue, you can see that price started to resist. There was supply here that was pretty much trying to gain back control. But at this point, if you know that, like I said over here, 15-minute demand is in control, supply is failing. Why is supply holding? Who is in control? If supply is holding and demand is in control, it's probably for liquidity purposes, and is exactly what happened here. As you can see, it eventually got swept, right? And then it broke structure again to the upside. This 15-minute was just demolished. Again, all this internal conversation is what you should be having with yourself, so you can understand why price is doing it. The way I'm talking, the way I'm explaining everything, it's for me to really internalize how price works, why it did what it did, right? According to the concepts that you have studied so far. And this over here, I eventually marked this up. You can see the New York session ends for me at 12. Obviously it lasts like until 3, 4, 5 even, but spreads are crazy. At this point, I'm not trading at these hours, right? So, however, end of day markup means you look at what happened during the day at the end of your trading session. So I see this and I realize that this, for me, for my trading plan, could have been a good entry. Why? Because this right here swept liquidity, right? This is structural liquidity. Look at this. It swept this liquidity. It mitigated something here, right? So if I draw this here, I can zoom in over here. I can zoom in, probably something mitigated like a demand there. It swept liquidity, mitigated this demand, failed to break the structure, but eventually did it over here barely. Eventually it went up like crazy. And then price started to come down, and you can see that it's starting to build liquidity. So I can sweep that liquidity, mitigate this perfect entry, and then just blast off, right? So this would have been a nice 1 to 9 trade for me. But like I said, this trade right here is out of hours because that's my plan. That's part of my routine. I do not trade after this time. Why? Because I have other things to do. Because I revolve my trading style around that. It may be different for you, but it's important to annotate all those things, right? To log this, right? So now when you have annotated all of these things, ideally the next step is to basically save these images, save them and import them into wherever you are journaling your trades, whether that be Excel, whether that be on Notion, whatever it is. But at the end of the day, redundantly, they're end of day markups, and that's what's important. So this is how you ingrain this into your mind. So, end of day systems. It seems simple enough, but the key here is doing this consistently at the end of each trading day, whether you traded or not, because there are some days where you just couldn't be on the charts and then you come back and you see the potential setups that were available for that day. This way, you literally drill down the setups into your head so deep that it becomes second nature to you when you see them in the live markets. This is literally the real shit here. Starting to do this and you will see how quickly you begin to understand the markets better and why it does what it does, allowing you to take better and more consistent high probability trades. So that's it for today, traders. Thank you so much for watching. Make sure to like this video if you got some value from it, and comment what you guys think. Let me know what you guys think in the comments. Subscribe to my channel to see more videos like this, and see you in the next one.